On call today, Michael Farr, also with us for the conversation. Ed Sheidlower, excuse me, and then Steve Leisman also here. Steve, I'm going to start with you. How is it that the economy, or how is the economy enduring energy prices, and how do we set up for the summer if commodity price headwinds continue through the next 3, 4, 5 months, which there's no reason to think that some version of this headwind won't sustain itself?
It's not been faring as bad as maybe people would have thought at the in the hallowed halls of Davos, where the World Economic Forum. I remember calamity being predicted at $40 a barrel, but look, it's not helping. 60
was disastrous for sure.
60 was disastrous, and 70 we're going to go down the adjective scale there, you and I, Dylan, to the point where. But look, it's not helping in the following context. The higher oil prices go, the more people are devoting to paying those energy bills. We've talked about this ad nauseum. Demand is inelastic. There is very little ability on the part of most Americans to respond to higher gas prices by reducing their demand. So then you get things like real income being flat to negative, and it doesn't create the disaster, at least not yet. But if this continues for a while, Dylan, I think it's fair to say that the economy is going to suffer pretty profoundly from it.
And at the very least, Michael Farr, you would think this would come at the expense of some of the discretionary retailers, as more money gets spent on gas as opposed to on impulse buys, and for that matter, the casual diners. Are you seeing, or have you seen, an investment thesis of any kind generated around oil now 120? Goldman Sachs suggesting it could run 150, 200 over the next 12 to 18 months.
Well, Dylan, it kills me to agree with Leisman, but I absolutely agree with Leisman here. And I think that that was the great thesis when we saw Walmart sales get weaker last summer. They were saying it was oil, it was gasoline, it was cost of getting to the store. Then we saw the big trade down to Costco, and we saw the trade down to Walmart, which sort of benefited those stores. Sooner or later, this is taking consumers' dollars, demanding consumers' dollars at $4 a gallon, and for energy, for air conditioning this summer. Higher costs mean lower spending somewhere else, and I think these things take time. It's just like a Fed cut or some sort of Fed intervention. It takes 18 months to work through the system. I think we just have to kind of keep watching. This is bleeding in, and it is having an effect.
Ed, if you look at the total data set, obviously not just energy but everything, what's your current investment thesis, and how does it compare to any level of bearishness or bullishness you may have had 6, 12, 18, or 24 months ago?
Thanks, Dylan. I think what we're seeing is the fact that the market's starting to really discount the slowdown that everybody's aware is taking place and starting to really be a forward-looking instrument and looking forward at earnings going forward at the end of 2008 and beginning of 2009. I think also what we're seeing is that the cyclical play, which has been told that it's been over for, at least 2 years, continues to be the case of a good place to be. And at some point, maybe the music stops. But in the meantime, the cyclicals continue to be a great place to have money invested.
But are you more or less bullish or bearish today than you were 6, 12, 18, or 24 months ago yourself?
I'm more bullish than I was at that point. I think, again, being that the stock market is a forward-looking instrument, I think that what we're seeing is that going forward, the earnings are starting to improve. If you look at the earnings reports from this last quarter, X out financials, the earnings were actually very, very good. And maybe the U.S. economy is very slow. We recognize that. But there's also a worldwide component here, and the rest of the world is doing very well. We don't think China's heading into a recession, and the demand in those countries is really helping to prop up this country.
Yeah, same question to you, Michael. More or less, give me on a scale of 1 to 10, bearish, bullish, today compared to 6, 12, or 18 months ago. How do you feel this morning?
I tend to feel continuing, I guess, concerned, cautiously optimistic, but I'm bearish. I don't see how all of these economic pieces continue to fly the way they've been flying. And it strikes me, that as you look at the fundamentals and you make your argument, that sentiment is still very bullish. And when we have bullish sentiment, we discount bad news. We don't want to hear it. We embrace good news, and everybody's off to the races. I don't know if reality sets in here, Dylan, and things start to trade lower, or all of a sudden we find out that suddenly things have turned and things aren't as bad as they appear. Mr. Buffett thinks that we're longer and deeper, not short and shallow for this recession. We'll see.
A pleasure, gentlemen. Thanks. Yeah, go ahead. Last word. Go ahead, Ed.
I was just going to say, if you look at the consumer sentiment numbers, they're obviously indicating that we are in a recession. But we've also heard that the consumer is going to stop spending for years, and it's yet to take place. Somehow they continue to spend money.
Yeah. All right. A pleasure to have all three of you.